Hey YouTube, how are you? Today, Tuesday, 10 minutes, we're going to talk about three E's. Three E's which can make your trading journey really easy. Okay. Okay. The first E is the explore. Explore what? In my opinion, know yourself. That is the biggest part which I can tell you about learning. I can tell you a small story from my early trading career. When after my MBA, I started my journey as an analyst, and by at that point of time, there was one old trader, and he was a Gujarati guy, and he used to tell me one story is that there are three kind of people in the stock market, and he says that the first people is the normal people who comes, and every bull bear cycle they make the same set of mistake again, and they don't learn from their mistake. Second people is the people who learn from the mistake and never repeat it, so they're the smarter one. But the third, which I want you to do, and I was 21, 22 at the back of time, and he said that third, which I want you to become, is the people who learn from others mistake. So what I have realized that that was a very deep statement, and it took me a lot of time to understand. But he did not tell me one thing, that while I'm trying to learn from someone else mistakes, what I'm going to do is my own mistakes, and am I ready to do that? So understanding yourself has a bigger role to play. Know yourself. What kind of person are you? Are you aggressive? Are you scared? You feel very very high when you win, but at the same time you are not able to manage his losses. You are not able to handle well when the trade goes against you. So that is a very important thing. There is a very fantastic book which I would like to recommend, Martin Pring, Investment Psychology by Martin Pring. Just google that book. That will definitely help you, and that is the first chapter. Know yourself. Second, what is available out there now? This is one of the most important thing which I have learned when I started my career. During MBA only I started doing. I used to read like every year. You cannot even every month. I used to read like 2 to 3 books, and within the next 2 to 3 years of my trading career, I have wrote like hundreds of books. And what I can tell you from my experience is that availability was not an issue. The issue was that what I was able to absorb. And then I realized that, do I have somebody whom I can speak with? Do I have a mentor who can shape me into certain direction? And while I know that that mentor has a certain role in my career, and I myself have to do, but he has helped me great in removing the initial hurdles, which has given me a clarity. So what is available to you? Do you have an access to mentor, or do you have somebody whom you can talk? Do you have somebody who is in your family, been a trading in a market, and been a veteran? I think that is one of the things which you should explore. And along with that, you should also understand that what do you like, right? What do you enjoy? I enjoy a lot options, right? Now there are people who just don't like options at all. They enjoy buy and hold. And there are people who want to do only futures, and they want to hold it for 3 to 5 days. Now, this is the type of a strategy you would explore. So, if you're new in the market and you're still wondering about what you do, in my opinion, explore, try a different strategy. Take a small position size, go wrong. It's okay to explore. Unless you explore yourself, you know yourself, you'll not be able to come out and understand that what eventually you're gonna do. Last point, what you're capable. Don't feel bad, and I know you might be feeling, but everybody has certain limitations. I'll tell you, I coming from a tech computer background, having a finance degree, I was very strong in coding and all those things. For me, earlier, early part of my life, I spent a lot of time on developing systems and all. But I struggled when it came to the psychology, because I was not able to handle the drawdown very well. So what I realized, that I was capable of developing system, but when it came to psychology, I was very weak. Right, that is a personality, but still I did not have it. I was very weak in fundamentals. Because being an engineering student, what I have realized is that you are not, taught the fundamental, which is the important thing, which eventually I learned during my finance and all. But your capability has a bigger role to play when it comes to the stock market, so you should respect that. Then what is reasonable? You should also explore that what is reasonable. You want to achieve, let's say you're 22, 23, you're 20, or you're just starting out in a career, and you want to achieve somewhere. Now understand that Warren Buffett and probably successful people have given a years and years of their life to explore certain things. What is reasonable? Are you able to give a 2 3 years of your life to learn something, and then only you should expect a return? So like every aspect of the career, Here also you have to understand that what is reasonable in terms of the your own expectations from the market. Now, second E, which in my opinion most important, and it took me a lot of time to understand, is the escape. Now, why would you say escape? So just write it down wherever you want to and print it on the table where you sit it. You cannot escape the learning curve. Now, why am I saying that? uh, I started pretty early in the markets, right? Being a Gujarati background and everything, there was always markets around me, and that has inspired me to do. And if you haven't read my story, like you could just Google and you'll find out that money control article. I got a lot of inspiration from my uh, professor during my MBA days. And he showed me the path in the markets, and it appealed me, more than money. I think the thrill of being in the trade was something I really enjoyed. So you cannot escape a learning curve. I read like 300-400 books in the initial many years of my initial 3-4 years of my trading journey, and what I have realized that no matter how much you learn, and that is where you remember the first part story I said, three mistakes, in the stock market. You learn from your mistakes, you learn from someone else's mistake. I was learning from someone else's mistake, but I was making my own new ones. You cannot escape learning curve. You have to accept that. So don't be harsh with yourself. You're gonna make mistake. You're gonna go through up down. You'll make money. You'll lose money. Again, you'll make money. You'll lose money. Again, you'll lose a lot of money. Then you have to bring back money, and you have to move on. What I have realized is that no matter how much book you read, how much mentoring you do, there will be set of mistakes which you'll do. What you can escape is how much bad you want to get into that phase of your life. So let's say you are going through a drawdown and you don't want to come on the road, because then you would be taking a smaller position. You would not be taking a larger position. You would be taking risk defined strategies that would automatically give you the kind of strategies which you have to learn. So what I realized that you cannot escape your learning curve, but you can make it less miserable. Yeah. Another thing which you cannot escape, in my opinion, is time to time there is going to be burst in your account. You have to be prepared for that, no matter. And I'll tell you one thing, and probably this is my own quote: you lose maximum when you're most confident. That is one thing which I have realized. Whenever I was so confident, I have betted so high, and that was a very trade that has gone wrong, and it has wiped me out many a times, right? Very big dent in my career. So what I can tell you from my experience is that if you are going to go burst and you are not mentally prepared for that, you are not invited into this market. It is going to be very difficult for you. Especially trading, investing can be little less harsh, in my opinion. But in trading, the moment you increase your bet size, that is the trade you will go wrong, and that is where you will find yourself making that mistake. So you cannot escape learning curve. You cannot escape from your mistakes, and you cannot escape from the fact that there is going to be a situation when you will bust your account. Last E of the trading journey, in my opinion, is expectations. First, you have to have a reasonable expectations of the winning and the losing. Legendary Warren Buffett has generated 19.65% CAGR for 65 years, and that is why he is the richest person in the life. It is very easy to make a 10,000 to 1 lakh. Okay, it is very easy to make a 1 lakh to 10 lakh, and you can still do it from a 10 lakh to 1 crore. But when you want to take it from a 1 crore to 10 crore, you cannot use the same strategy. The compounding works for significantly well in a longer run, and you have to tone down your expectation with the life, that when you start with a smaller capital, you are going to make a mistakes. And remember what Jim Rogers has said. Jim Rogers says that making mistakes early is good in the stock market, because then you can learn from the mistakes and you can come back again. You are still have alive that time. So expectations about winning, expectations about using. You cannot win everything. You cannot lose, your entire capital. So you should be prepared for that also. One expectations which you should probably ready. Forgive yourself. Don't be harsh. I feel so annoyed when I still make the same mistake. You feel like killing yourself. You have to be harsh. You cannot be so harsh with yourself. Go out, party, drink some beer, go out on a date, do whatever you like. But markets are very ruthless. And if you be harsh with yourself, you'll not be able to, come out alive. So expectations about not only just winning, losing, about time. This is I've started my career in 2006 to 2020. I've given like 14 years and I've started at 21. So you just understand that in spite of starting so early, I had the little success that, if I may want to call it, I'm still far from the where I want to reach. But I think that you have to be very humble with the time expectations. So guys, this is a 3E: explore, escape, and expectation. You won't find it any book. This is my own gist of whatever I have learned. And if you're new in the market, and if you're trying to, learn something into trading and investment, this is the phase you will go through. I hope today's video has added some, value to your trading journey. It is all about exploring yourself, in my opinion. If you explore the first E well, then automatically 2E becomes very easy. So please, guys, if you like my video, please share, subscribe, and press that bell icon. Thank you so much. Shabba khair.